this morning, the S&P's Case-Shiller 20-city home price index shows that housing prices were higher than a year ago, but still below forecasts. Here to discuss housing, the economy, and just what this means is the man behind the index and Yale University's professor, Robert Shiller. Good morning to you, Professor.
Good morning, Margaret.
Make sense of these somewhat conflicting indicators here for this. Is this showing a recovery in housing, or are we teetering on a double dip here?
That is the big question. I think this is a time of extraordinary uncertainty about home prices because they've been falling for 3 years, from 2006 to 2009. Then they started to pick up with the new administration, the new recovery plan with the tax credit for home buyers. But now some of these programs are being withdrawn, and the market is falling a little bit on a non-seasonally adjusted basis. It's really hard to tell right now whether the downtrend could resume or whether it's all over and we found a bottom.
Yet we had, consumer confidence come in higher than expected in the month previous. We saw that figure just this morning. So is it that you doubt that the consumer can continue to purchase homes without the government essentially paying for him to do so?
Well, the government has been paying for us to do so. And what I think it did is it brought sales forward. People who were thinking of buying this summer said, well, wait a minute, if I wait until this summer, I don't get this tax credit. So they move ahead and do forward. So what's going to happen to this summer season? That's the big question, because we pulled sales in from that season. And now people are thinking, well, it's summer again and home prices ought to start rising again. But we just don't know. And
you don't see a shot at seeing a renewal of the home buyer tax credit at this point?
Well, anything is possible. If home prices look weak, if the economy looks weak, any number of things might come back again from the government, because the government is, the double dip worry is on people's minds. It's been on our minds for 6 months now. And it could happen, especially with these new developments like the Greek debt crisis. And I think the BP oil spill is relevant. It kind of damages our confidence again in another dimension.
Yeah, with that in mind, give me a sense. Have you handicapped at all what the impact of that BP oil spill will have on some of the regional economies that are going to see oil washing up on their shores? I mean, do you have projections as to what that's going to do to housing prices?
Well, that's an indirect connection. But in my mind, I emphasize behavioral economics, that human psychology matters a lot. Mm-hmm. And what the BP oil spill does is it kind of damages not only the coastline, which is one thing, but it also damages our sense of confidence in our government, in our corporations. This is a big mess up. And it's turning out that we weren't ready for it. We don't know what to do. And so that is a confidence, gave us a hit to our confidence, and it's unpredictable how that will interact with other things and stories that we hear in coming months.
We're seeing the sell button get hit pretty hard this morning, but if you take a step back and look at the climb, the slow, steady climb that we've seen up from the March lows of last year, it's been a run-up of more than, say, 70% here. So can you really call it a crisis of confidence at this point, or is it just sort of an air pocket?
This stock market rally since March of 2009 is amazing. The turnaround was exceptionally sharp. And you have to go back to the Great Depression in 1933 to find a similar example. These are both times when our expectations are volatile, because we just had a depression scare, and now suddenly it looks better. But I think this volatility suggests to me higher risk going forward. And we don't know whether this rally in the stock market and the housing market, which occurred at the same time, is really stable and substantial. It's too fast. It's too emotional for us to say that it can be sustained with any confidence.
All right. Thank you for your perspective this morning, Professor Shiller, joining us from Yale University.